Good morning. Welcome to Stock Market Today. It's Monday, May 18th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where I get a lot of the content for this show, as well as provide daily stock ideas for you to consider upon further research. Hits your inbox every trading day before the market opens. So I hope everybody had a great weekend. Let's dive right back into it. U.S. equities were higher in Friday's trading, finishing near the best levels of the day, but they still did close lower on the week. Communication services and consumer discretionary outperformed, while utilities and financials lagged on the day. Treasuries were weaker, with the curve steepening. The dollar was weaker against the euro and the yen. Gold finished up 90 basis points, and WTI crude continues to rally, settled up 5.9%. on the day on Friday. And as we get to the desk this morning, futures are higher, up about 1.5% after coming under pressure last week. Asian markets were mostly higher overnight. Australia leading there, also seeing some gains in Hong Kong, South Korea, and Japan. European markets are seeing good gains as well. Treasuries are mixed, with the curve steepening a little further. The dollar is stronger against both the yen and the euro. Gold is up 90 basis points, and WTI crude is adding on, up another 5% or so in early trading this morning. Now, the bid to the equity market this morning appears to be a function of investors taking solace in Fed Chairman Powell's comments on 60 Minutes last night that they are not out of ammunition by a long shot. That is a quote pulled from an article in the Wall Street Journal that I was reading this morning. But, kind of let's dive into the structure here. Just all the back and forth. Again, we've really gone nowhere for over a month, right? We're still in what I call that frustration zone. Now, support did hold on a down week, so that's an encouraging sign for the bulls. I've been highlighting that 2750 to 2800 area as initial support. Below that, 2485 to 2660 starts to incorporate the key retracement levels of this advance off the March 23rd low. Now, resistance remains 2950 to 3000, 2950 being the top of this recent zone. Also, this gap here, 3000 kind of holds the declining and still declining 200-day moving average, which is ticked down to 2998. Now, that 13-period CCI and its 3-day moving average, rather, is closer to oversold than to overbought, and Chaikin money flow continues to dip into bearish territory. So, it's mixed on the indicator front. Support is holding. I think the biggest key for me is the continued narrowing of leadership. We'll talk about that a little bit later in the show as it relates to small caps. The strength in the market, when it's there, is still being concentrated in many of the bigger growth names. So there's something to keep in mind as you're running through a stock selection process. That's why that focus on leading stocks and leading areas really does become important. Our market in a minute now. What are we writing about on a Monday morning? Well, we held that key support despite losing ground on the week, but small caps resumed their trend of underperformance after that brief respite that we started talking about earlier last week. Gold is consolidating near the recent highs as treasuries do the same. And as I said, futures do point to a higher open here today. Now, taking a look at the major indices from a power bar perspective, all of the major indices were higher on the day on Friday. The Dow added 28 basis points, 2 to 13 bulls to bears there. S&P 500 up nearly 0.5%, 47 bulls to 169 bears. The only group with a bullish ratio is the NASDAQ, up 63 basis points, so a slight outperformer on the day. 28 to 16 bulls to bears on the ratio. Small caps did outperform on Friday. 277 though to 373 keeps that ratio in bearish range as bonds downtick, sending yields higher. Com services, your best group on the day, up 1.4%. A neutral ratio there, 4 bulls to 4 bears for the Com services group. That's ticker symbol XLC if you're interested in drilling down on that ETF. So according to the Chaikin Power Bar, large cap stocks are more bearish than small cap stocks. The major indices across the board are mixed as the NASDAQ does hold a bullish ratio. Let's hit our stock of the day now. And this is an interesting one to me. It topped on my radar screen last week and continued to be there as I was doing my work over the weekend. PerkinElmer, PKI, has a very bullish Chaikin power gauge rating. It's in a strong trend above the rising long-term trend line, and it's in a strong industry group, life science, tools, and services. So, think back to the healthcare group and that sector that has been exhibiting strength of late and really over the past couple of months. Now, if I drill down on PerkinElmer a little bit further, we can see what do we have. We have a very bullish stock that's outperforming the market. It's now oversold based on our indicator, with bullish money flow. And our checklist, the Chaikin Analytics, really breaks it down for you. The top three metrics here kind of tell you the what you want to own, right? Very bullish stock, outperforming the market and in a strong industry group. And then, when's the ideal time to think about looking at it as a potential bullish idea? Well, we want to see it when it's oversold. We want to see it when it's above the rising long-term trend line with strong money flow. So that checklist quickly allows you to see where a stock stacks up in the what and the when categories and the questions that we're trying to answer. So PerkinElmer is a name that I'm highlighting in my note today. I think it's an interesting name. It's a leading stock in a leading area of the market. As the market does continue to consolidate, you're going to see areas that do better. You're going to see areas that do worse. And the key to stock selection, in our view, is to focus on those areas of the market that are performing better than the market. And that's in all instances, right? Whether the market's rising, declining, or kind of going nowhere as it's been doing here for the past month or so. Take a look at our sector tracker now. Speaking of healthcare, the movement of the major sectors over the last week of trading, only healthcare is higher at the top of the list, where it has been for quite some time. Communication services with that good day on Friday in the number 2 slot, the defensive staples, as well as technology rounding out the top 4. Now, the middle of the road, discretionary utilities, materials, and financials. And at the bottom of the list, industrials, real estate, and energy. So we've spoken a lot about the financials of late, especially the banks. They seem to be on everybody's radar screen in the near term now. The weakness in the banks that we've been talking about for a while I'm seeing more and more comments and hearing more and more comments about it. So just from a sentiment standpoint, it would seem that most people are kind of aware of the fact that the banks have been and remain under pressure. Real estate with its idiosyncratic risks, and energy, again, I still contend that the rally in energy is counter trend in nature until proven otherwise. And that seems to have been what played out over the course of the past 5 days of trading. Turning now to our industry in focus, I guess healthcare is a theme. Remember, a lot of this is auto-generated, right? And I analyze it for you in real time. Our industry in focus is pharmaceutical services, which has been a good one over the past 6 months. It's outperformed the S&P 500 by nearly 15%. And it does have a bullish power bar ratio with 10 bullish or very bullish stocks for 7 bearish or very bearish stocks. It's currently ranked number 6 of 21 subsectors, having moved up 4 slots over the past week. So some indicative names there, names that are very bullish within this group: Supernus Pharmaceuticals, SUPN, Amphastar, AMPH, and Horizon Therapeutics, HZPN. They all have very bullish Chaikin power gauge ratings. And if we drill down on the ETF itself, the XPH is the fund that we're looking at as a proxy for this group. We can see a bullish ETF power gauge rating, and the fund is in a strong trend above a now rising long-term trend line as it consolidates this most recent advance. Really outperforming the market here, right? On a relative basis, you can see the strength and the intensity of that outperformance has actually been picking up over the past month. So as the market's gone sideways, this group has seen improving relative strength. Oversold in the near term. I don't love the bearish money flow, but right now it needs some time to play out. The weight of the evidence still supports this being a leading area of the market, largely a function of relative strength. So I think it's a good area of the market to go looking for long ideas. Taking a look at what's trending now. Friday's S&P 500 gainers and losers, our movers and shakers. Royal Caribbean up 6.5% as some of the reopening type stocks caught a bid. I will also note that Royal did price some notes back on the 13th. Gap Storage, GPS, continues with a very bearish rating. Nothing company specific there, but we are seeing some commentary around reopening themes. Semiconductors have been a volatile group, especially with some of the news lately of the potential for escalations of a trade war or further trade tensions between the U.S. and China. Right now, largely centered on Huawei NVIDIA kind of bucking that trend. They are a strong semiconductor name. Neutral rating here at Chaikin Analytics, but an outperformer, up 5.73% on Friday. OKE, nothing company specific, to take that stock higher by 5.5%. And MCK caught an upgrade at UBS to say add 5.5% on the day on Friday. Loser side of the board, Lam Research. Again, China trade tensions, U.S.-China trade tensions, focused on semiconductors. Lam down 6.4%. VF Corp earnings and guidance took 6.3% out of that stock. Qualcomm falls into that trade tension bucket, down 5% on the day. CMA, nothing company specific to drive trading there, down 4.8%. And KLA, down 4.8%. Again, semiconductor related, an equipment name. Some headlines out late last week as they related to the relationship between the U.S. and China, focused on semiconductors, with Huawei kind of in the middle, a big buyer, as you can imagine, of semiconductor content. So continue to watch that group and continue to watch what's happening from a U.S.-China trade perspective. Now let's dive into the charts. All right, small caps, they tried to get it going, right? And there was a lot of excitement a couple of weeks ago about the improved relative performance of small caps, right? So if I take a look at the IWM here, what I see is kind of a similar dynamic to the S&P 500, just not as strong, right? Kind of stuck between the 50 and 200-day moving averages with a resistance zone overhead. Now, the S&P 500 is in this resistance zone, right? So you can see that small caps are still well below it. RSI, middle of the range, so neither confirming nor denying what's going on, kind of just, actually, if anything, it's confirming this consolidation that we're seeing. But to me, it's the relative strength that's important, right? The attempt at outperformance on the part of small caps was an encouraging sign for equity bulls, as it potentially showed that leadership may have been broadening beyond just the mega cap names in the S&P 500. Now, that has quickly given way to what can be described in the near term as a potential false breakout. We've been in this consolidation, tried to break out, fell back below the breakout level. So I think that's something that we're watching very, very closely here for a sign that leadership is broadening. I also look at what I call a reflation basket of ETFs and other themes to see if their performance starts to pick up, just to see if there were signs that strength and leadership are broadening beyond, the fan mag plus a small select group of growth names that have been leadership. And that's not new, right? They've been leadership for the better part of the past 12 months. So, in order to get really bullish on the market here and have confidence in emerging trends to the upside, we really want to see leadership begin to broaden, and it's just not happening yet. And at the same time, gold continues to consolidate near the highs. Take a look at gold here. The continuous front month contract, right? Breakout, consolidation, now trying to break out again, right? But just below these highs. Notice the RSI holding bullish ranges, telling us that there's bullish momentum behind the trend. And if we take a look at gold relative to the S&P 500, similar dynamic at play, right? Breakout in early March, fear takes it to a high, and then we begin to consolidate. Now we are breaking below that above that downtrend line, as gold now appears to be resuming leadership against equities. Kind of, if we want to infer messages from that, to me, that's a store of value, flight to safety type action here in gold. And I would also take note that silver has picked up a bit of late as well. And then treasuries, again, another defensive area of the market. Treasuries hold support. And it's interesting to me that a lot of the strength that we're seeing has been of late, and by late I mean the past week, has been in the long end of the curve. TLT, the 20-plus year treasury, holds support at the 50-day moving average and begins to move higher, all while the RSI holds in bullish ranges, indicating that there is still momentum here. Basically, to me, it looks like we're working off this big spike and consolidating. I think odds favor a resolution to the upside. If we bring it down to IEF, which are the 7 to 10 year treasuries, very similar dynamic at play, on the verge of a new high after holding support at the breakout level just above the 50-day moving average. So that's going to wrap us up for today. Hope everybody has a great Monday. Head over to chaikinanalytics.com/test drive, where you can sign up for a free 14-day trial. Have a great Monday, everyone. I'll be back with you tomorrow morning.